G'day folks, welcome back to the weekend review of natural gas and the ETFs. So we were in a bit of a downtrend previously, and we did see a bullish divergence, and that bullish divergence has actually completed or is still in play. So we've got a bit of a bullish retrace at the moment. Before we can go any further, make sure to hit that like and subscribe button to support the channel. In terms of the outlook as of today, May 4th, the natural gas market overview. Natural gas price have surged by 16.57% over the past week, closing at 367. This uptick is attributed to a positive summer outlook and robust employment data signalling increased demand. For AI demand impact, the rapid expansion of AI technologies is propelling energy consumption, with data centers projected to account for 13% of US electricity demand by 2030. Natural gas supplying 40% of power to these centers is poised to benefit, potentially straining supply and elevating prices. For geopolitical events, global natural gas demand is projected to decline in 2025 due to trade wars and geopolitical tensions, as noted by the International Energy Agency. So first, looking at the natural gas commodity price, we'll look at the trends first, the long-term trends. On the monthly, we've broken above the moving average band, and the CCI is also bullish above the moving average band. So we've got bullish momentum at the moment on the monthly, although it's had a bit of retrace back towards that moving average band. On the weekly, it was bullish for a number of months, but notice it's broken down below those respective moving averages on the CCI and the price. So that's a somewhat bearish to neutral positioning. That price is still broken above, so I would call it neutral at the moment. A bit undecided on the weekly where it's going. And on the daily, you can see that it was bearish during that period from around about the middle of March on the price and below on the CCI. And it's finally broken up through both price and CCI moving averages, giving us a fresh breakout to the upside on the daily. And if we go to the intraday chart, we've got the 1 hour chart here. And again, we always trade in the direction of the higher time frame. So here you'd be going along with both the price and the CCI broken to the upside. And here you can see the price is making some movement to the upside. And I've got some back tests to show you on the bullish momentum at the moment, but let me just go through the trends first. And if I put in the trend lines, you can see there it's actually broken through that upper diagonal descending trend line. We did have a bullish divergence back here on the CCI, higher lows versus lower lows on the price. That actually broke up and hit our initial target range at the 23-38% range. Just draw that Fibonacci again for you. So if I take it back to that high there, that was the initial target range. Now, that's actually coming close to that 61%, which is a key area for Fibonacci retracement. And if it breaks above that 61%, and what we do then is we extend that Fibonacci to that previous high. You can see there it's currently on the 38%, and then the next level of target would be that dotted line there, which is the 50% retrace, which is 39.45. So again, just that's how we measure the Fibonacci's. We always just take it a step at a time. But do note as well, we've got a bearish divergence currently on the hourly, lower highs on the CCI versus higher highs on the price. And hasn't pulled back yet. As soon as it starts pulling back, we'll draw a target for it. But at the moment, so long as that price keeps rising and that CCI remains lower than that previous high there, we're going to consider that a bearish divergence. Now, in terms of a bearish backtest, let me just get rid of this Fibonacci to make it a bit cleaner. I'll get rid of these as well. So what we do is we take it back to that period back there on the 12th of March, and that's where this back test on the stop loss approach and the average down approach started, and that would have been going short during that period back there on the daily, so you would have traded that short on the hourly. Now do note we've had a bit of a drawdown here on the average down approach, whereas the stop loss approach had a couple of drops, but it basically has kept pretty much going slightly higher, a bit of a drop off at the moment. As well, we've got another drawdown on the average down approach. If I put those trend lines back in there, the reason I've taken them out to make it a bit cleaner, but also I want you to notice during this period we had pretty much the CCI and the price were moving in alignment, but then back here we had a bit of a bullish divergence. So let me just expand that. This is how you read the bullish and bearish divergence. So when we're going short in this period, you can see there both the stop loss approach and the average down were doing okay. But here we had a bullish divergence, and that's where you would have probably stopped trading until we started seeing the price then start moving in line with the CCI. And that's what it started doing. We had a small, very narrow bearish divergence there, and the price dropped off. So basically what I'm saying is, had you stopped trading or taking your profits when that first indication of a bullish divergence was occurring during this period, that's where you would have stopped taking trades and you would not have had that drawdown. Now again, since the price moved up, the price started moving in line with the CCI. You can see there the lower highs there, and you would have started taking short positions during that little period there because the CCI and the price were aligned until you started seeing this bullish divergence again. So again, higher lows on the CCI there versus lower lows there. That was your first indication of a bullish divergence. And again, you would have taken your profits off on both the stop loss approach and the average down approach. And the price kept dropping. The CCI kept going sideways until that point. And that low there was still higher than that point versus that low there. And that was still a bullish divergence. And since then, it's actually bounced. Now, as I said, on the hourly, you notice we've got a bearish divergence. So again, just keep that in mind. So if you're going long, I'd be taking money off the table and not letting it sit there in case of a sudden drop if you're going long. And I'm not suggesting you go long. And why don't you go long? Because, well, you would have gone long at this point here. But again, just be careful. You probably don't want to be holding long positions at the moment in case that falls suddenly. So this is BOIL, so the long-term trends. First off, on the monthly, we've got a bearish momentum. There's no CCI drawn for it. And that's still trending low. It's still bouncing down from that moving average. On the weekly, we did have a bullish divergence here. Higher lows on the CCI versus lower lows on the price. If I put those trend lines back in there, you can see that lower lows on the price versus higher lows on the CCI. That actually bounced up through our moving averages on the price, and then it's finally broken down again. Now you'll notice here we had a slight dip below the moving averages, but then it's recovered back. Again, I've got it color coded, so you can see that it's broken above the very narrow moving average, which is still ascending, and that price is also making a bit of an upswing through that moving average band on the price chart. On the daily, again, it's in that two diagonal trend lines descending. It's trending in that range. It fell below here slightly. We did have a bearish divergence back here versus higher highs on the price versus lower highs on the CCI. That was a bearish momentum during that period. And then it's finally broken through, similar to the commodity price. It's broken through both averages on the price and the CCI. Now down here, I've got this longer term CCI 1500, and that's basically used as a smoothing moving average on the CCI indicator. This is the 150 CCI. This is the CCI 1500. Now, if we go to the 1 hour chart, again, we did have a bullish divergence back here on our last video. We drew a target. It actually went right through that. And similar to the commodity price, we draw Fibonacci's. And had we taken it back, that was where it was drawn previously. You can see there it's hit that 23-38% range. So now it's at that point, it's broken through and it's now approaching the 50%, similar to the commodity price, approaching this diagonal trend line. So as soon as it breaks through that, and then the next level of support would be that 61% Fibonacci. And if it breaks through that point, then we do the same as what we did on the commodity price. We raise the Fibonacci, and that'll be our, you can see that coincides with that 38% on that compared to that diagonal trend line. So we take it one Fibonacci step as it rises. We then look at it there. Unlike the commodity price, we don't have a bearish divergence on the CCI and the price. So that's still moving in line with the CCI is moving in line with the price. So KOLD is the inverse chart, as you guys are aware. On the monthly chart, it's broken below the moving averages, giving us a bearish momentum. There's no CCI for that one. On the weekly, it was bearish. It made a bit of a retrace up through that moving average band on the CCI. Notice that was a false break. It broke suddenly. That's why I'd like to see these moving averages bend upwards like it did back here to be more positive. You can see there the CCI had a false break and touched that moving average on the price chart, and then it gave us a strong weekly candle there last week. So that's now continuing a downtrend. On the daily, back here we had a bullish divergence on our last video versus lower lows on the price, bounced up, hit our 23-38% target range, and that would have been drawn from that low to that high there. Okay, so it's already hit that range, pretty much just kissed it possibly. So that high there on that wick was 32.04, and the 23% was 32.35. So it actually just missed it, but came very close. So, and then it's bounced down from that 23%. Now at the moment, the price is broken below the moving averages, and so is the CCI, giving us a bearish momentum. which means, what does it mean? On the 1 hour time frame, we go short. So you can see here during this period, you'd be going short when that CCI breaks below the moving average, and so does the price. So you would have entered short periods back there, and you would have closed it out once when the CCI touched that moving average band on the hourly. If you're trading the hourly, you would have closed it out on that candle and then reopened it as soon as that broke below the moving average again, and you would have opened it a couple of hours later if you're following it. And you'd still be in a trade today, and there's no bullish divergence to be concerned with. That price is moving in line with that CCI, so that's good to see. We did draw this bearish divergence back here for our last video. Higher lows on the CCI versus slightly higher or slightly lower lows on the price. So that's down to that level there. You get take it at the same period, and it actually broke quite strongly down through that 23-38% range. And if we're to measure that Fibonacci, again we take it one step at a time. So it's already, that would have been measured down to there. So that was the 23-38%. You can see there now it's actually broken below that 61% level, which means in all likelihood we may see lower prices on KOLD. Lastly, looking at UNG. Now UNG had a bit of a false break there on the monthly, and then it's continued in a downtrend on the price chart. But notice the CCI is still bullish, so giving us a somewhat neutral positioning. Careful about going short strongly there. We may see a bit of a push to the upside again with that CCI remaining above the moving averages on the monthly. On the weekly, we also had another break below the moving averages on the price and also the CCI. But again, notice that strong bullish candle last week. There's no divergence on either of those on the weekly or the monthly. There was a bullish divergence back here during that period, and it broke up higher, but then that's now completed, and it's now, the price is dropping off again, as I said. On the daily, you can see there, similar to the other charts, we had a bearish divergence here, broke down initially through our little Fibonacci range there, but again, if we're to draw a longer term period of Fibonacci, that would have been broke down below that level there. It sort of fluctuated in that 23-38% range for a while, and it's finally broken down to the downside through that 61%. Now since then it's recovered, broken up through the moving average of the CCI, and just about to break through that on the price chart as well. Now if we go to the 1 hour chart, again we predominantly take long trades from here, so that could be a new entry you could have taken there, and that would have been aligned with this bullish divergence, and that could be a continuation from there. So again, we'll take it one step at a time, but again, be cautious. We'll always take a trend in the direction of the higher time frame. In this case, if you're trading on the hourly, take the direction of the daily.